Hi everyone, my name is Erwin. I am a real estate investor here in Ontario. I've owned over 40 properties in and around the Hamilton area since 2005. Team and I, we've helped clients transact on close to $500 million worth of income properties. And around 2 years ago, I had to pivot because the writing was on the wall that the opportunity was better somewhere else. One of the top questions I get as an expert on US and real estate investing is, where should I invest in the USA? So this is what we call our Spotlight series on Phoenix, Arizona. So let's get into it. So why Phoenix, Arizona? Well, first off, I just got back from Phoenix and it is one of the hottest real estate markets in the USA. There's rapid population growth and strong job creation, all things every real estate investor should be looking for. Pro-business environment, attracting investors. That also means landlords. Pro-business is pro-landlord. Economic drivers include booming tech and business hubs, investor-friendly market conditions, unstoppable population growth. And we'll get into some of the details. For example, Phoenix has a 3.2% annual job growth rate. When you compare that to the national average of 1.1, it's nearly triple that. Major employers include Intel. Intel has 12,000 employees in Phoenix, Arizona. Amazon has 36,000 employees. TSMC, so some of you know who they are, Taiwan Semiconductor Manufacturing Company, little company out of Taiwan. TSMC for short, they made an investment of $65 billion to build 3 manufacturing plants to create 10,000 full-time jobs, and that will spin off into 80,000 jobs. TSMC also manufactures for, in case you don't know who they are, a little company called TSMC. They manufacture from these little, not so well-known companies called like AMD, NVIDIA, Tim Cook, who's part of this fruit company called Apple. They've already committed to buying microchips from this plant in Phoenix, Arizona. TSMC has announced an additional $7 billion investment in Halo Vista, an innovation hub to attract top engineering talent and suppliers. Might these people need a place to live? I'd love to have these really high-paying people as tenants for my own properties. Now again, this is investor-friendly market, as in there's no rent control laws. There's a streamlined eviction process, affordable housing. The median home in Phoenix is $450,000. $450,000. Calgary, Alberta, for example, is about $442,000 if you factor in the exchange rate. Again, that's in US dollars, so they're pretty close. And then just for fun, I put the table together of the higher GDP per capita cities in Canada versus Phoenix. So when I ranked the highest GDP, so the amount of income per person, and we ranked it by city, comparing Phoenix against the top cities in Canada, Phoenix came on top. And you know where, well, and then unfortunately Phoenix, well actually no, fortunately, Phoenix came on the bottom for medium house price as well. And then it's no surprise that Phoenix is considerably more affordable than anywhere in Canada. Now, why this is important means is if things are affordable, means there's more room for prices to appreciate and for rents to appreciate, versus in a place like Toronto, Vancouver, there's not really much room for rents to appreciate compared to our already crazy prices. Now, population growth and demand. Phoenix is the 10th largest metro in the USA. There are over 5 million residents and it's growing. 40% of households are renters, which tells us there's consistent demand for tenants, for rentals. There's going to be market stability for us landlords, and there's of course cash flow potential from the demand of tenants. Now, Phoenix is a relocation destination from the coasts, more expensive areas, and then more recently, really unfortunately, there was a case. There's a natural disaster called, most of us know it as the LA fires. Now, to give details behind that, just to summarize it, again, terrible, terrible devastation. 12,000 structures were destroyed, mostly homes. That is going to cost around $150 billion. That's how much will need to be rebuilt. So one can naturally expect that there will be a surge in the cost for materials and for labor. Because historically, last time, the previous worst natural disaster in California back in 2017, after that, labor, 3 years afterwards, after that natural disaster, labor prices rose double over a 3-year period, and building costs in general rose approximately 20%. So what does that mean? That means to me is already historically, many people from California moved to Phoenix as an alternative. We may see more people move that direction. And also, we're naturally going to see more building cost inflation in and around the West Coast area, including Phoenix. Because again, this is an unnatural disaster. Well, it's an unnatural event causing a surge demand for labor and building materials. And you know, anyone who's been watching Florida knows the same thing happened there as well from the hurricanes. Now, here's an example of a property that we released recently. Now, this is a seller leaseback. A seller leaseback means the tenant is the seller. The existing seller wants to stay as the tenant, and the benefit to the landlord is there's no vacancy up front. So this property is a 4-bedroom, 2-bathroom built in 1980. As I mentioned, the owners want to stay as tenants. This house is over 2,500 square feet. It's much larger than your typical rental property in Canada. Purchase price, $305,000. So this is well under the median average. This would be in the starter home category. Renovation cost is $30,000. Projected rent, $2,000. Estimated annual appreciation at 3.5%. The cap rate, for those who understand cap rates, and if you don't understand cap rates, please look it up on YouTube what a cap rate is, 4.7%. Now, why else do we like this property? Now, specific to the zip code, I know we Canadians have area postal codes, Americans have zip codes. Unemployment rate, you can see in the top left, unemployment rate has been basically collapsing in the area. And then to the right of that, you see the population is consistently growing. Again, this is exactly what real estate investors should be looking for. Median household income by zip code, again, very high, likely to get higher as those TSMC jobs, as the manufacturing opens and they actually start hiring for full-time employees as they're under construction right now. And you look at the prices, the prices are from Zillow, they're not from us. That you can see the prices have consistently rose historically. They did dip when interest rates went high, and since then it actually looks like the prices have started to recover. And my anticipation, and then based on everything I've already discussed, my guess would be we see prices continue up from here. Again, it's a best guess. This is a gamble. Now, how do we here at Share, how do we help people build a portfolio? So someone can simply just sign up for a free account. You can see deals like the one I just shared. You can go through the entire pro forma on the website. We even send out a sample deal once a week and all sorts of tips on how to be a US real estate investor, even as a Canadian. We help our clients with the search, and that includes, and the majority of our clients are actually buying properties off market. We have a wonderful relationships with wholesalers across the country. So we're actually, again, we're typically buying properties off market and below market value. We help our clients close, including coordinating the due diligence, home inspection, property managers, and the contractor inspections. And we coordinate our clients' renovations and the lease out of the property. So then we also collect all the rent and issue all payments on behalf of our clients so that our clients can just go back to living life, and everything that non-landlords do, that's what our clients are able to do. They're able to be passive, yet they own the property 100% and control it 100%. Now, again, the company I work for represents Share. I'm head of business development at Share. I am a partner and a part owner. And if you're interested in more information, you simply go to iwin.sharesfr.com. From there, you can book a call with me. You can create a free account. Or if you're just interested in seeing more information, as we're planning on producing more content just like we just delivered, you can just simply like and subscribe. Have any questions? Feel free to comment below.